Very much, Senator Small. Senator Roberts, please take us home.
Thank you, Chair, and thank you for appearing
promptly as possible.
Okay. If I can reference a December 2020 headline, Westpac hit with a second bank regulator penalty. Westpac broke key capital ratios, and the consequence APRA levied was to make Westpac keep more money in the bank, in other words, to comply with the law. This has the effect of reducing the bank's ability to lend by reducing their available capital. Is that a fair analysis?
Thanks, Senator, for the question. So, just to be clear, you're referring to the press release of March 21. Did I hear that correctly? No.
No.
Which one?
A headline of December the 1st, 2020 in Reuters.
December the 1st, 2020.
Yep.
So at that time, Senator, there were a range of AML issues for Westpac.
AML?
Anti-money laundering issues. APRA announced at that time, just before Christmas, that it was taking action on 3 issues. There was an additional capital overlay, which I think is the point you're making, of an additional $500 million on top of the $500 million that already applied. A bare investigation and some supervisory work, and I'm happy to talk about that. In terms of the capital impost, Westpac is a bank as per other majors who are very well capitalised. They're running CET1 in the 12s at the moment, and they have plenty of capital to lend for worthwhile projects and housing.
Okay, thank you. Another headline, April 2021, APRA takes action against Macquarie Bank over multiple breaches of prudential and reporting standards. The penalty there was to keep more money in the bank. That also has the result of reducing the bank's ability to lend money, correct?
Senator, that's another example where a bank breached a number of reporting issues on capital and liquidity, and also on stable funding. We took action on the bank, and part of that action was the capital impost, and I think the same answer applies, that you have a bank with considerable capital and considerable ability to lend commercially, and in fact in the case of Macquarie, they have been lending very significantly into housing.
A third example, APRA takes, this is a headline from October 20th, APRA takes action against Bendigo and Adelaide Bank for breaching prudential standard on liquidity. Their penalty, well, their consequence, was not a penalty, their consequence was to keep more money in the bank. That also reduces their ability to lend.
Senator, I think all 3 examples that you give go to breaches of standards that APRA has, and as we've explained to the committee previously, we have an enforcement approach. The adoption and compliance with prudential standards is critically important to safety in the system, safety for depositors in particular, and so we need to and have taken appropriate action, enforcement action on each one of those cases, and so that's what we've done.
Yeah. Can I just clarify one thing, Senator? So you keep referring about our actions reduce the capacity to lend, and that's not quite right. What we do when we're adding more capital to the bank, effectively we're changing the mix in which it uses either its shareholders' money or depositors' money to fund loans. And the actions we take mean effectively that a bank has to use more shareholders' money and less depositors' money to fund a loan, but it doesn't actually stop the bank from or reduce the bank's ability to lend. It just says use more of your shareholders' money, get your shareholders to put more on the table and use less depositors' money.
Doesn't it make the bank, it reduces the bank's ability to lend in that it makes, ties up more of the liquid funds?
Only if they don't have enough capital to meet their regulatory requirements, and then they have to stop. But as John has said, these banks are running well above their minimum regulatory requirements. So the issue is really it changes their, because capital is more expensive than funding from depositors, it makes their funding costs slightly higher.
So the headline in the Reuters the first paragraph, the Australian bank regulator, APRA, said on Tuesday it was forcing Westpac Banking Corp to raise its cash reserves after it fell short of prudential standards, its second enforcement action in a year against the country's number 3 lender.
So the effect of what we did was to increase the minimum amount of shareholders' money that we required Westpac to have.
Okay.
But they use that money still to lend.
I ask because in a meeting on the responsible lending legislation with my staff, between my staff and Treasury, Treasury indicated that as a substantial reason behind moving responsible lending regulation from ASIC to APRA was because ASIC was imposing restrictions on the bank's ability to lend. But you'll argue with this then, that is exactly what we see that APRA is doing, is it not? Because it's altering the liquidity.
Well, I think we've already answered that question, Senator.
So, since the Royal Commission, has APRA ever launched an action against an ADI, a bank, that resulted in a fine, a real penalty, not just complying with the law?
Yes, we have, Senator, and an example of that would be Westpac, again, for a breach of reporting standards. A small fine, but it was the maximum fine that could be levied under the FSCOTA Act.
What was the fine?
It was, from memory, 1.5 million.
Isn't it amazing how 1.5 million is a small fine these days? But anyway.
Well, we're talking about a major
all
bank.
relative to these, isn't
It is all relative. Does the National Consumer Credit Protection Amendment supporting Economic Recovery Bill 2020 allow APRA to fine a bank that engages in systemic breaches of the responsible lending guidelines?
So, no, Senator.
Thank you. What action is open to APRA to regulate low-doc home loans which are provided for in that legislation?
Well, that is not something within our responsibility, Senator.
Well, we could find none.
Senator Roberts, we will need to wind up soon.
Yep, I'm almost done. What about all the people who lose their homes, their savings, their marriages, their mental health? Is there no consideration for the human cost of bad bank behaviour in this legislation?
Senator, is that a question?
Yes.
If it is, it's not a piece of legislation that APRA has a responsibility for, Senator.
But you will have, or for responsible lending.
No, that's not correct, Senator.
I thought you were going to have responsibility for responsible lending.
So what we have, as explained earlier, is we have a standard, prudential standard, APS 220. There are some very minor changes to that. And APRA's current stance in relation to how it assesses credit will be pretty much the way it has been for many years, so no change.
Under the new legislation.
Well, correct, Senator.
Thank you. APRA runs the Bank Executive Accountability Regime, BEAR scheme, which fines bank executives for bad banking behaviour. You have taken action against the banks for bad behaviour. ASIC and AUSTRAC have caused fines on the banks of over $2 billion in the last 3 years. How many of the executives in charge of the banks have been personally fined through BEAR?
I was going to say the BEAR doesn't give us capacity to impose fines on individuals.
None at all.
That's not part of the legislative framework.
Well, last question, Chair. Westpac are removing night-safe wallets and advising their business customers to not accept cash. Isn't that rule number one for a bank, accept the Queen's currency? On what basis are APRA allowing the banks to make such fundamental and illegal decisions without reference to APRA?
Senator, APRA does not have particular standards in place in terms of what commercial activities banks undertake and services that they provide. So they are commercial issues for the banks.
Thank you, Chair. Thank you.
Thank you. Just on your last point, though, I do think it is a little bit of an issue if banks did, and I'm not saying that Senator Roberts is necessarily correct, but banks refuse to accept legal tender. But I will leave that part there. Thank you very much for your time.